Hi, everyone. My name is Mary Magnuson, and I work for Blandin Foundation as administrator of the Blandin Community Broadband Program. It is my pleasure today to welcome you to the 9th in our Broadband Leadership webinar series on creating successful broadband infrastructure projects. Today, we have local finance options. We're offering these webinars to community leaders interested in learning about broadband infrastructure planning best practices and tips, from partnering effectively with ISPs and units of government, to working with broadband consultants, to successfully applying for public funds. And now let's get started. Today's moderator is Bill Coleman of Community Technology Advisors, one of our primary broadband program consultants. He will set the stage for today's webinar and introduce the speakers. Bill?
Good morning. Everyone has seen my little slide here, our broadband development process. And we're getting pretty close. If you've been working over the last 4 weeks on our process through the chart, you'll know that you're getting close, because local finance is incredibly important part now of rural broadband development projects. For several years, we were able to just have projects that were state funds with provider funds, or maybe some federal funds thrown in. Today, it's more and more important that we have local funds as a part of that stool. I think the competitiveness of the state broadband grants really requires a strong local participation, not just letters of support, not just easing right-of-way restrictions, but real funding. And today we've got 4 speakers, and we have Rebecca Kurtz from Ellers, and Rebecca and I worked together many years ago at the state of Minnesota in the Department of Economic Development, and great to have her with us today. We have Brent Olson, Big Stone County Commissioner, Vince Robinson from Lincoln County, and Andrea Nekowicz from Fish Lake Township. We're going to jump right in and turn the screen over to Rebecca. Rebecca, welcome. And I'm going to
Thank you. I'm happy to be here. Good morning, everybody. For those of you who are not familiar with who Ellers is, it is a municipal advisory firm. We work throughout the state with communities, school districts, and other public entities, as well as we have offices or presence in 5 other states. I work specifically in the state of Minnesota and do a combination of debt issuance, financial planning, and economic development with communities. So as we jump in here, I will share my screen, make sure. Can you guys all see that?
Yes.
Okay, perfect. So as Bill introduced, we're going to be talking about preparing for debt issuance today. And as many of you know, a local participation, or as Bill alluded to, is a big part of what we're seeing in broadband financing moving forward. And so a couple things to kind of kick this off when you're starting to think about how does a city participate or community participate, especially if you're looking at issuing debt. The first step is really having that clear understanding of the pieces that are going to come together. And I think you have spent some time talking about this, but again, to reiterate, making sure that you have a clear understanding of the broadband project, of the private parties that you may be partnering with and what they are bringing to the table for the investment, along with what is being proposed for you from the public sector to bring forward. What is your role going to be, and what are the expectations of your contribution to this partnership? And then finally, assuming that there usually is that financial component, as mentioned earlier, what is the repayment source, or how is that public participation going to be funded? And we'll talk about this a little bit more as we get into the presentation, but is it going to be taxes? Is it going to be assessments? Are there other fees or revenues that the public entity has that can help pay down that debt service for the project. As a little background or overview just for Minnesota debt, in order for a community to issue debt, it needs to be under the authority, or you have to have an authority. And Minnesota statutes outline and give communities that ability to issue debt for projects, broadband, infrastructure, economic development, and a wide range of projects throughout the state. With few exceptions, though, communities are not able to issue what we call general obligation debt without going forward with a referendum or voting on that debt. And we'll talk about the importance or one of the benefits of having general obligation debt here shortly. But we are allowed to issue general obligation tax abatement debt, issue general obligation debt for equipment, and then also for if you are a subordinate service district established within a township. And so we do see that being one of the main tools that can be available. As you know, I alluded to, there are security requirements when issuing debt, and the general obligation debt is maybe one of the more common tools, I guess, that I would say we use in Minnesota. When we talk about general obligation debt, what that means is that ultimately the debt service on the bonds are going to be paid with tax levies if all other revenue sources are either not available or a shortfall. So when a community issues general obligation debt, they're making an irrevocable pledge to levy ad valorem taxes for the payment of the debt service. That doesn't necessarily mean that taxes have to be the payment for that debt service. And as we get farther into today's discussion, you're going to see some examples of how general obligation debt was issued, but it is not necessarily the taxes that are paying the debt service, or it isn't intended to have taxes paying the debt service ultimately. But with that general obligation pledge, we typically do see a lot of interest in the bond market for those types of bonds. And we do typically see them being a less expensive tool for financing projects, along with seeing a little lower interest rates compared to some of the other options. Again, that reason really comes back to that general obligation pledge that a community ultimately says, if all revenue sources are not sufficient to pay our annual debt service, we will levy taxes for a shortfall. So that also is one of the benefits that Minnesota communities have, is that it's seen out in the bond market as a strong security. And so that brings more bidders to the table for bond issues, along with typically providing a little lower interest rate than some of the other options available. The second main type of security is pure revenue. And in that situation, there is not that underlying pledge to levy taxes, and the bonds are being sold with the understanding that debt service will be secured specifically for the revenues. So it's not quite as secure of a payment for the bondholders, even though there are going to be a lot of provisions put in place to try and provide as much security as possible. There isn't that underlying promise to levy if there is a shortfall. So with pure revenue bonds, we do see they are a little more complicated sometimes. They can be a little more expensive to finance as far as the costs incurred to get the debt pulled together. And then we do sometimes see a little higher interest rate, again, just because there is a little less certainty and security with them. Sorry about that. So starting with the first and maybe a fairly common option for financing in Minnesota for broadband projects is general obligation tax abatement bonds. For tax abatement bonds, ultimately the community is pledging tax abatement revenues to pay the debt service. With the way, for those of you that may be familiar with tax abatement, it can be argued that ultimately they are tax revenues, but they are going to be tax revenues from specific parcels that are being pledged to pay the debt service. Now again, when you issue the debt, you need to pledge the tax revenues from those specific parcels. If there are other revenues available, as we'll see in some discussion today, you can use other revenues outside of the tax abatement or tax revenues to make that payment. They can be written down by any source that may be available for you. Again, one of the reasons that we do see these as a fairly common financing tool is that general obligations, so they are a little less expensive to issue. They do have a lower interest cost typically. However, in order to establish a tax abatement area and pledge those abatement revenues, the participating communities will need to hold a public hearing to identify what parcels are going to have their tax revenue pledged to the debt service. Compared to some of the other options available though, it is just that public hearing, and as long as the abatement is approved, you can move forward with geotax abatement bonds. So it can be fairly simple and straightforward. One thing I do want to note though is that there is an annual abatement maximum. And for each taxing jurisdiction, that is the greater of 10% of the jurisdiction's tax capacity, or $200,000. And I bring that, call that out because this would be the same abatement maximum that communities would have if you were using tax abatement for economic development projects. So for example, if you were a community that had a maximum abatement amount, annual abatement amount of $200,000, and you were going to use $180,000 for pledging to a broadband project and issuing tax abatement bonds, that would give you a maximum of $20,000 available for other economic development projects that may need assistance or that you may want to assist in some way. That $20,000 would be the maximum for the term of the bonds being outstanding. So it's just something, we don't see this being a problem frequently, but it is something to keep in the back of your mind, is if you are starting to push up against that maximum, figure out what do we want to have available for the broadband project, but then also maybe we want to retain a little bit for other projects that we don't know what they are at this point in time. And there are different ways to address that. It may mean that you stretch out the term of the abatement a little bit longer so your annual debt service payments aren't pushing up as close to that $200,000, or there may be other ways to structure the project, but just be aware that there is that annual cap, and that includes any abatement that would take place for the taxing jurisdiction. I have a very sensitive mouse, I'm realizing, sorry about that. A second common financing for broadband in Minnesota is establishing a general obligation subordinate service district and issuing debt. And this applies strictly to townships. Counties and cities are not able to use this authority, but if you are in a township, then assessments from the benefiting properties in the township would be able to go through a process to petition, request that the township board consider setting up a subordinate service district. After that process is completed, then the town board does need to hold a public hearing and vote on that. And if the district is established, they can move forward with pulling together the pieces for issuing general obligation subordinate service district debt. And again, you will be hearing a little more about that in an example as we move on today. With this, it has the benefits of that general obligation, the same as a tax abatement bond. And then, as I mentioned, one thing you do need to do prior to issuing the debt is have that subordinate service district established. The third type of financing that we typically see for projects in Minnesota, and maybe not quite as common, but is a communication system revenue bond. And this is that third option that I mentioned, where that payment source is going to be solely on the broadband revenues or the communication system revenues. And it is not going to have that underlying general obligation pledge or promise to levy taxes if revenues are not sufficient. And so with this being a pure revenue bond, it does become a little more complicated to issue. There is a little more risk for the bondholders in this type of situation. And because of that, there is a little more expense to issue the debt or cost of issuance, along with we sometimes see a little higher interest rates. I will say that right now in today's environment, interest rates are very low, and so we're not seeing as much of a spread between a pure revenue issue and a general obligation issue, but you would expect to see a slightly higher, a few basis points higher if it was a pure revenue issue.
Becky, we have a question for a subordinate service district. Can the district include the entire township?
Yes, so for a subordinate service district, the district could include the entire township. What is required is that a petition signed by at least 50% of the property owners for that proposed district needs to be submitted to the board, to the township board, requesting that they consider setting up that subordinate service district. So if you are able to get at least 50% of the township to participate in that petition, that would be an option you could do.
Thank you.
Did I hear another question?
I think that was parenting going on.
Oh, okay. Okay, we will move forward then with continuing to talk about the pure revenue bonds. A couple items to point out is typically, and you may have already talked about this in previous sessions, but typically in a revenue situation or revenue bond situation, we would see the system owned by the public entity. However, we don't necessarily always expect the public entity to operate and manage. So it may be owned by the city or county, but then operated by a private entity that specializes in broadband or communication system operations. I mentioned that revenue bonds can be a little more expensive. One of the reasons is that many times we do see a debt service reserve required. That debt service reserve is an additional amount of money set aside. Typically it's an amount equal to about 1 year's debt service payment, but it is set aside for the term of the bond issue really as that safety net. So since there is not a general obligation pledge, if there was a shortfall for one of the debt service payments, the community could, or the issuer could pull from that debt service reserve to make sure the payment is being made. If that is never needed for a revenue bond issue, that reserve is then typically used to make the final bond payment before it matures. Also, I want to note that city charters do need to either allow for the issuance of this type of debt. Otherwise, it is likely that the community may need to go for a referendum to get approval from the voters to move forward with the project and with issuing debt for it. The other type of financing that we do see with broadband is lease type options, which could be certificates of participation or EDA or economic development or city leases set up with their partners for providing broadband. I will say this is something we see more often in Kansas, for example. We don't tend to see it in Minnesota, and I think one of the main, as frequently, not that it can't be done, but we don't see it as frequently. And I think there are a couple reasons for that. One, it does become more complicated and more expensive to set up a lease to finance broadband projects or any type of project for that matter. With Minnesota and with us having some of these tools with the tax abatement bonds, subordinate service district, or the ability to issue pure revenue bonds in some cases, we do see communities go toward those options more so than looking at the lease option, again, because it's less expensive to do these general obligation options, and it is a simpler process in order to move forward. So after you have decided to issue debt, or that you need to fund a project, it's really that decision of, do you want to move forward and issue debt? And there are really some basic reasons why communities do issue debt, but in most cases, it is because of cash flow and fund balance considerations. And so we don't have large pots of money sitting around that are not allocated that we can just draw from. And so it is common to issue debt, and that allows us to pay for the project, manage the revenues or fees that are needed to pay off that annual debt service, and extend it, finance it over time, just like the reason why we would take a loan out to purchase a house or a car versus pay cash. After you decide you're going to issue debt, one of the first steps is to develop a financing plan. And that is really working with a municipal advisor and your team to figure out when you need the money, how much you're going to borrow, what authority are we going to use, whether it be tax abatement or revenue, subordinate service districts, but what is our ability to even legally issue debt, along with how it's going to be repaid and what term that is going to be over. There should be a discussion on the method of sale, on whether you do a competitive sale where you take the issue out to the market and have a wide market from maybe across the nation bid on that, with the thought being that the more bidders that are out there, that is the way to really know that you are getting the best interest rate or the lowest interest rate. The other option would be to work with a local bank or place it with an underwriter, which absolutely, we understand there are relationships out there that you may want to keep it locally, or you have existing relationships you want to work with, which again, absolutely works for projects too. So it's determining what that method of sale may be as you move forward. And then also just keeping in mind, what are your existing and future debt considerations? Are there other bond obligations, either existing or moving forward, that may need some of these same revenues that you are pledging for the broadband project, and how do you balance those?
Becky, do you ever see any where a community, let's say they're going to issue $200,000 in debt, and 10 people with 20,000 each would just finance that as a community benefit, zero or low, very, very low interest?
Mm-hmm. You know, we don't see that very often, but that absolutely could be a situation that we could work with. And in a situation like that, I think we would pull in the local bank to kind of be that overriding entity to manage that, so you don't have the 10 different people bringing the money forward. But that would be an awesome situation if we did have communities where we could have people bring that forward. And I think in a situation like that, how it may mechanically work is going through like an abatement or subordinate service district process. So you do have that legal authority to issue it, but then working with the local bank to collect those revenues and kind of place the bond with that local bank over the term of the financing for it.
Thanks.
But that would be awesome. I'd love to see communities that could have that kind of participation from, and it would definitely help with, it'd be in some ways simple because it could help with some of those costs that are associated with issuing debt, because it can get expensive depending on the type of debt that you move forward with. As you prepare for the sale, there is a team typically that needs to be put together to get the bonds sold and closed. There are authorizations that need to be done, and as I know you have discussed previously, contracts is you're working with other private partners that need to be put into place. An offering document or official statement that explains the details of the debt needs to be put together and brought to the market if you are looking at selling it competitively, or typically if you are working with a local bank, they do want some type of document that explains all of the details of the proposed bond issue. You need to include bond counsel, again, to make sure that you are staying within those legal boundaries that are set forth in Minnesota statutes in order to have the ability to issue debt. And you may want to consider having the bond issue rated. If you're working with a local bank or a private placement, this may not be as important. And if you're issuing competitive general obligation debt, I would say have that discussion with the municipal advisor and the other partners on your team to determine if the benefit of going through the rating and having that rating outweighs the expense of paying to get that rating. I mentioned there's a whole team that gets involved when debt is being issued, starting with the community representatives and elected officials. Typically there is a municipal advisor that helps lead those discussions on looking at options for the structure, the term, payment sources, and how all those pieces pull together, as well as bringing the bond to the market. Bond counsel looking to make sure we stay within the boundaries of the law. I mentioned a rating agency in some cases. There is the bond purchaser, which could be a national underwriter, or it could be your local bank who you work with on other financing issues. Paying agents play a role of helping just make sure that the debt is being paid off on the semi-annual payments, or when the payments are due, help coordinate that. If it is a competitive type sale, we typically would see a paying agent required. If you are working with your local bank, that may not be a need for the issue. A trustee typically is tied with a revenue issue, and they look at making sure that the interests of the bondholders are being met and that obligations of any covenants are being followed. On the day of sale, the issuer and the municipal advisor receive the bids from the bonds. They make any final adjustments that need to be made to make sure that everybody is comfortable with the structure and that it complies with what was proposed. And then the bond counsel has a resolution that ultimately is considered by the governing board and voted on to award the bonds, assuming that the sale went as planned and the goals that were to be met have been achieved. Funds typically are available between 2 to 4 weeks after, and there are many people that are involved in that team that help complete all the steps from when we actually accept the bids and the town board or city council, county board award the bonds to when funds are available to make payments on a project. A couple other considerations just to keep in the back of your mind is many times we see communities typically issue tax exempt debt. If the ultimate bond proceeds are going to a private entity, you may need to consider issuing taxable debt. That is a discussion that you can have with your financing team and consider what the requirements are that would move the issue from being tax exempt to taxable. We may see slightly higher interest rates. Again, in today's market, we're not seeing them being dramatically higher, but that is something to consider. I mentioned reserve requirements specifically for revenue bonds. And then also just be aware, and I'm guessing you have talked about some of this in previous discussions, but any covenants that may be associated with revenue bonds that would say you need to maintain rates at a level high enough to provide coverage and a little bit of cushion compared to what those annual debt service payments are. With that, I will turn it over or back to Bill. I am happy to take questions now, or I will be around through the discussion and happy to take them after the other presenters.
Thanks. That was great, Becky. Appreciate that. Next up is Brent Olson, County Commissioner from Big Stone County. Welcome, Brent.
Hey, Bill. Okay, I'm going to talk briefly about Big Stone County, about why we decided to do this, what some of our challenges were, and perhaps some arguments you can use as you roll your project forward. Big Stone County is on the far western edge of the state. It's very rural. 5,000 people. Our biggest city has 2,000 people in it. Not all communities were eligible to participate in this program because, as far as the state of Minnesota was concerned, their internet wasn't quite bad enough. And we had 10% of our population is older than 80. And a lot of those folks couldn't figure out what all the fuss was about and why we were even bothering to talk about this. Now, there's no doubt as to the need for rural broadband. If you Google rural broadband, you get 37,600,000 results. So there's a lot of people talking about this. There is profound historical precedence. Electricity in the 30s, telephone in the 50s. Both of those major advances were largely left behind in rural areas. And it took the local communities rising up and working together to bring them forward. And it's rural broadband is a transformational issue, just the way electricity was in the 30s and telephone was in the 50s. Now, there's lots of ways to go and do about this. We went about it with a public-private partnership. We have a cooperative in our area called Federated. Well, they've merged into a couple different entities now. But as a cooperative, they bring a little different emphasis to serving their customer than some of the larger telecoms do. They have a little more of a local focus. And they came to us and said, you know, there's this program out there where you can get $4 million in funding from the state if your application is approved, which is good. Which is bad is that it's not a $4 million project, it's an $8 million project. And Federated had done enough broadband projects where they felt they could make this pay if they had to pay half the costs and if they could borrow the money over 20 years. Unfortunately, for an entity like Federated, they can only borrow money for technology for 10 years. And the math didn't work. That's where the county came in. Now, as a county commissioner, I always kind of feel like I'm on the ragged edge of incompetence. I need to know about road graders, and I need to know about healthcare for our Medicaid population and everything in between. So I'm not a specialist in this area, but so you do need to work with people who know what they're talking about. In the end, our solution was the county bonded for $4 million. Federated makes the payments on that bond. The total cost to the county taxpayers was roughly $100,000 to get an $8 million project. Now, there are some bumps in the road. You need an advocate because Not everyone in your community is going to think they need broadband. You're going to have people who are perfectly content with what they have, but you're also going to have businesses who are going to be screamingly frustrated because they can't get the service they need to compete in the 21st century. And as Bill has said many times, you know, a small rural county, you lose a few of those people, you might never get them back. And so you need to anticipate those needs and give those people the tools they need to survive and prosper. Now, one of the reasons you need to work with experts, with people who really can help you, is you're dealing with other people's money. At the time, $4 million was the largest bond by far that Big Stone County had ever offered. Our county attorney had some profound concerns about it that needed to be addressed. And at that time, it was hard to get clarity on whether what we were doing was actually permissible or not. As these projects move along, that clarity is a little easier to get now, but you need to work with people who know what they're doing. Now, in a worst case scenario, if Federated stops making the payments, it goes defunct, the CEO takes off to Paraguay with the company funds. In the worst case scenario, Big Stone County will own a $8 million fiber to the residence network for less than half that amount in cost. And that would be a black swan event. But as I'm sitting here working out of my home office, black swan events do occur on occasion. So you need to factor them in. But it's been a transformational tool for Big Stone County. We hit our peak of 10,000 people in 1950. We've been on a downhill slide ever since. Now we're at half that many people. If you like to fish, hunt, and play golf, Big Stone County is paradise on earth. But it's been trouble to start and run and maintain a business. And we feel we've turned the corner on that. So if you're on this call, you're interested, and I would just urge you to persevere. It's like doing your taxes. You do page 1 and then you turn the page and do page 2, and sooner or later you've worked your way through it. It's not particularly easy, and God knows it's not pleasant, but it's the best service we can provide our constituents. That's it. I'll listen for questions at the end.
Thanks, Brent. That was great. And it's great to have a super partner in a telecom provider, and co-ops make the great partners. No doubt about that. Then Brent also told me that last year was the first year they had more births than deaths than Big Stone County.
2 years in a row now, Bill. 2 years in a row, we've had more births than deaths. First time literally in my lifetime. And you know, I'm an old guy.
So that's really turning the corner, that's for sure. So thanks, thank you. Next up is Vince Robinson, who's almost a neighbor of Brent from Lincoln County. Vince, tell us your story.
Here. Thanks, Bill. Appreciate that. Again, I'm Vince Robinson. I have a company called Development Services in Ivanhoe, Minnesota. We do community and economic development work throughout Southwest Minnesota. And, you know, just really, Brent, thank you for that overview of what's going on in Big Stone County. We are fortunate enough to be able to partner with Big Stone County on some economic development activities. And I can tell you firsthand the difference that broadband has made in the activity that's going on within the county there and the business climate within the county. So it does make a difference. It makes positive differences all over the place. And certainly now with some of the homeschooling that's going on, it's essential. Unfortunately, in Lincoln County, we're a little bit behind that timeline that Big Stone County was on. We started looking at some broadband activities about 2 years behind Big Stone County. And for the past 4 years, we've been actively pursuing broadband throughout our county. We're fortunate enough to have another telecommunications cooperative called Interstate Telecommunications Co-op, ITC for short. They've been serving the western half of our county for, well, since telecommunications started here in the county. And they serve primarily in South Dakota, and they have a few exchanges in Minnesota. When we started to look at broadband and how we could implement that within the county, we looked at a variety of different mechanisms. First, we're served in the eastern half of the county with Frontier. And if any of you have tried to work with Frontier on this, it's not always the easiest thing to do in today's environment. They have their own issues that they're dealing with, and rural broadband development was not high on their radar screen. So we kind of ruled them out. We also talked to a couple of small investor-owned telephone companies. Some of them were privately owned, some of them had small investment groups. We looked at them, and they were more geared towards wanting to do a wireless system and not necessarily cover everybody in the county with fiber to the premise. And while we would look at them as an alternative, our primary goal was to get fiber to every premise in the county. We kept going back to Interstate Telecommunications Cooperative to see if they would be willing to expand their service territory from the western half of the county into the eastern half of the county. They kept putting us off until they were able to provide fiber to the premise everywhere within their current service territory. So they were finishing out that, and actually Lincoln County was the last spot that they were doing that. There's a variety of reasons for it. Why Lincoln County was last on the list, and that primarily had to do with, we, compared to the rest of their service territory, we had the best internet, and so they started with their worst territories and worked to their best, which of course now we're the worst because they got everybody else up to broadband. So they've made the commitment to do now the entire county. We worked with them, $8.5 million for them to do the eastern half of the county. That's in addition to the investment they're making in the western half of the county. That $8.5 million is pretty similar to what Big Stone County was looking at. You heard Brent say theirs was $8 million, and Brent, correct me if I'm wrong, but I think you were looking at serving about 900 potential customers with that. And that's what we're looking at in the eastern half of Lincoln County, about 900 additional customers with this $8.5 million investment. So it's not inexpensive, $10,000 per hookup. That's not at all unheard of in our rural areas. So ITC then said that they would put $2.5 million into that. Lincoln County had to come up with $6 million. The county commissioners are fortunate enough to have some additional revenues coming in from some wind power generation that's going on. So we're having a lot of new developments with wind towers in the county. Those are taxed with what's called a production tax, and that can be used outside of the general funds or the general levy of the county. So previously to this, with all the other wind power developments, the county had been just putting those funds into the general fund and reducing general property tax as a result. They've now made the decision that with additional production tax revenue, they're going to put that into specific program areas, and broadband was one of their first areas that they wanted to concentrate on. They pledged up to $6 million, then went and applied for a border-to-border broadband grant. Unfortunately, we weren't successful at obtaining that. So now the county is going through some of the activities, or has gone through the activities that Rebecca was talking about with tax abatement-backed general obligation bonds. And that's the mechanism that they're using. They don't anticipate using those tax abatements as the source of revenue. They're going to use the production tax off these wind turbines. So they bonded for $6 million, and that will be repaid over a 10-year time frame. They're actually hoping to have it repaid over 5 to 6 years. I believe they'll have to get through 5 years with the bond in order to meet the requirements of the lenders with the bond, or the buyers of the bond. So that's in a nutshell how we're doing it. Unfortunately, we weren't able to work a deal like Big Stone County was able to, where the company is paying the bond payments. In Lincoln County's case, it is actually a $6 million incentive that the county is putting in with the telecommunications cooperative to entice them to do the activity. So it's a huge investment for a very small county. Again, our county is a little bit less than 6,000 people. And so huge investment, but the county commissioners and the leaders in the county all have felt that without it, we don't have a county in the future. So that's our story.
Vince, thank you for that. Was there any feedback from the western half of the county about spending all this tax money on the eastern half of the county?
We really did not hear any kickback at all about that. I think it helped that it's the same company that's doing the entire county, and they're kind of building it all out at the same time. So I think everybody feels like we're all moving forward together with this activity. And so I have not heard, more than a couple of negative comments about it. So
Super, that sounds great. Andrea is with the township, Fish Lake Township in Chisago County. Andrea, thanks for joining us today.
Good morning. Thank you for having me. I'm here today to talk about our broadband project in Fish Lake Township. And as Bill said earlier, it is a township in northern Chisago County, or about an hour north of the cities. And it covers 6 square miles, and we have about 950 households that are served. And one of the things that got us started on our project was a neighboring township applied for the deed grant, I think back in 2016 or maybe 15, as a subordinate service district for half of their township. And so we met up with our local HRA EDA, and she had a meeting, and I said, let's roll the dice, let's see what we can do here. So I held an impromptu meeting for some residents just to take the temperature and see how they felt. And within 2 days' time, I did like a two day out time for this 9 o'clock meeting on a Thursday morning, and I had 20 residents show up and going, yes, we need it. Fish Lake Township, where we have 1,500 parcels, we have about 950 households. We didn't have any sort of, township-wide internet or even utilities. We had no cable providers. The DSL internet that was available to about 20% of our population, which was in more of the denser areas. And that was provided by CenturyLink. But what we were finding was that they were having a hard time. We also had very poor cell service. We did not have any good cell coverage. If you draw a triangle, you'll see there's Cambridge and North Branch and Rush City, which each of the cell towers were there, but we're in the middle of that triangle. So by the time the signal gets out to us, it's spotty, and it's spotty at best. So that left the options of internet for most of our residents at satellite, which we know has limitations. And then if you could get any kind of cell phone signal, you could maybe use a hotspot. Again, we're limited on speed and usage on that as well. So what we did was we reached out to the residents because we had a short window of doing this project and, oh, I'm sorry, and getting feedback from the residents before the application was due to deed. So part of our project was that we would apply for some grant funding, along with CenturyLink picking up some of the cost, about half of it, and then leaving the township some of the cost. So our project was a $5 million project. The utility provider CenturyLink was going to pay half of that at 2.5. We were granted $1.8 million from deed and leaving the township to cover, a little over $1.1 million. Now that is a huge undertaking for us. 2,000 residents, our annual levy at the time was about $500,000. So when you're talking about 1.1 million, that's a lot of money for us. So one of the things that we decided to do was we put out a survey to all of our property owners, all of our residents. We sent a survey out, we asked them several different questions about if they had internet, how they used internet, what they would like to see. Are they willing to pay if we do a private partnership with CenturyLink? And we had, like I said, we sent out about 1,000 and we had 345 responses. One thing we did do is we limited it to 1 response per household. And we thought that that was the fairest way to do that because, all right, so my household, there's 5 of us and I have 3 teenagers who all like to game. So you get that response from my household, you're going to get 5 yeses, but who's paying the taxes? Mom and dad. So we thought the fairest way is going to be, 1 response per household. So out of those 345 responses, 97% of the people said that they use the internet for business and work related. 45% of it was schoolwork. 72% of the people said that they were dissatisfied with their current internet service. 25% of them were paying $90 to $150 a month for some sort of internet service that they could get, whether it would be multiple internets, whether a satellite and a hotspot. So when you ran out of one or one went down, you had a backup. And the really thing that put it over the top for our town board was 67% were in favor of a tax increase to provide fiber to the home internet to every household in Fish Lake Township. And when we did the math on it, it was going to be, I think it was like $80 per $100,000 of valuation. And I just did the math for what it was this for 2020, and it's actually lower than that. So it's actually about $40 per $100,000 of valuation for each property owner. And the project was, it was great. We didn't have really any big problems. Any issues that we had, we had great contact with CenturyLink. We were able to work out any problems that arose, come to agreement that was fair for everybody involved. The project started, they started excavation on the project in spring of 2018, and we were actually getting hookups by late fall, by end of November of 2018. And to date, of the 950 properties, there is 55% of them are hooked up as of January. Those are just the most recent statistics from CenturyLink. We worked with Ehlers as far as the financing. That was another big component. Very scary thing. This whole project was very daunting and very scary to me. Well, because I actually ran with it and I had to do all the logistics of it. And at first I thought, oh, this is, we're just a little township. This is a big project, but it was important. It was important to me. It was important to a lot of people. And we got help. There's help out there. There's help with financing. There's help with every facet of it. And I think a lot of people who have experience are willing to help and give their advice, because this is such a great thing. Especially with, one thing I forgot to mention back on the survey results is 65% of the people were really concerned that their house, they weren't going to be able to sell their house. The value of their house was going to be limited, or they were going to have a hard time selling their house in the future if it didn't have internet, because that's what people are looking for. I've also had responses of people who were new to the area, who kind of came up from the cities or maybe some places that had internet. They didn't even think to see if there was internet available. And they point blank said, if I knew that there was not internet at this home, I would have never bought it. Couple other of them were like, well, we're really thinking of selling our house to get someplace with internet. It's a necessity these days. It's not a want anymore. It's a need. And like I said, Ehlers was a great partner to help us with the financing. They did, all the logistics, all the legwork, really walked us through step by step, answered questions, came to meetings, laid it all out. So we were able to provide the public and our residents answers to their questions and to alleviate any concerns that they had. And like I said, and CenturyLink and their partners were great to work with. Even residents, when these guys were out all summer, trenching through the ditches and laying all the cable and the infrastructure, I did not hear one negative response from any of the workers or from any of the residents about the workers. They were all very personable and all, willing to answer questions and stop and say hello and take the time to talk to residents. So I have really no bad things to say about this project. I mean, a lot of it I'm sure is luck. We got lucky. We didn't hit any big, the project overall I think cost a little more than CenturyLink had originally anticipated, because they upgraded some of the infrastructure on their end. But I mean, it just went off without a hitch, and they restored the ditches back to everything and it was a great thing for us. And especially now with everybody working at home and the COVID, we wouldn't be able to do it. I mean, I honestly don't know how these kids, because they're rural kids, they're rural school kids. I mean, the Rush City graduating class is like 60 kids in it. So all these kids distance, doing their distance learning, they wouldn't be able to do it if we didn't have it, because there wasn't an option. And in the case we're in now, there's nowhere for them to go. They can't go to the library. They can't go to the coffee shop. All the pieces fell into place, and we had a great experience. And I really hope that, a lot of other municipalities and counties and cities and townships can experience the same thing, because, once you have it, it's great. I mean, just the money saved as far as, people cut down on their cable bills because they can stream more. They can run their thermostats, wirelessly, so their house is controlled. When they leave, the heat goes down. We found there's just more savings than the cost of the actual project. So, I just love to share our story, and I'm actually working on an internet project with Linwood Township in northern Anoka County, and theirs is a little different. There's going to be a subordinate service district. It's going to be through Midco for a couple separate areas where they'll expand into these areas, and these residents are going to pay for it through an assessment. And right now we're on a little bit of a learning curve with COVID, because with a subordinate service district, as mentioned before, you have to have a petition, a 50% petition of the property owners, but you can't really encourage people right now to go door knocking. So I did just learn that the legal requirements of a petition can be met through the mail. So I think what we might be doing is do a mass mailing to these affected property owners and taking petitions through the mail to get the wheels rolling, because there's some hearings and some other things that need to take place before actual construction and everything can be done. So we're learning, but we're trying to help anybody out that, I mean, I'm always willing to help anybody out that I can, just from what I've learned from the process, because I've learned from so many different people, and there is so much help out there.
Brenda, thank you so much. That was great. And now you're a broadband leader, so we appreciate that in East Central Minnesota, because that area, there's a large areas that aren't served, and might be up to the townships to do it, because the counties are a little more hesitant, I think, so far in the East Central Minnesota. We're up against our time, so I'm going to turn it over to Mary, and she's going to close out the recording, but then we're going to stay online for about a half an hour, or as long as the interest is there. And so I appreciate everyone's participation. Mary?
Thanks, Bill. And thanks to our speakers today, Rebecca, Brent, Vincent, Andrea, and thank you all for joining us today. On Thursday at 9 a.m., we are going to end this webinar series on creating successful broadband infrastructure projects with Communicating to Achieve Your Community Broadband Vision. For more information on this series and links to join, visit broadband.blandinfoundation.org and click the webinars banner. You can check out the Blandin on Broadband blog later today for a recap and recording of today's webinar, and we hope you share it with your friends and colleagues. Thanks again for attending, and have a great rest of your day.